What if the money sitting safely in your bank account suddenly wasn't so safe anymore? In 2026, a growing number of Canadians are waking up to a chilling reality. Keeping large amounts of cash, even as little as $20,000, could quietly put your bank account under scrutiny. No warning, no phone call, just a freeze that locks you out of your own money when you need it most. It sounds unbelievable, right? After all, it's your money. You earned it, saved it, and trusted the system to protect it. But behind the scenes, new banking regulations, anti-money laundering rules, and automated monitoring systems are becoming more aggressive than ever. Transactions that once seemed normal are now raising red flags. Even legitimate savings could be flagged as unusual activity. And here's where it gets even more concerning. Many people don't find out until it's too late. Their debit card stops working, transfers get blocked, access denied, and resolving it, that can take days or even weeks. So the real question is, are you unknowingly putting yourself at risk just by holding on to your own cash? In this video, we're breaking down exactly why this is happening, what triggers these freezes, and most importantly, how you can protect yourself before your account gets flagged. Don't wait until your money is locked away. Hit that like button right now and stay one step ahead. All right, let's get into what's really going on here, because this isn't just a rumor and it's definitely not something you should ignore. First, you need to understand why banks even care about how much money you're holding in cash in the first place. It's not because they suddenly want to control your savings for no reason. It comes down to something called financial monitoring systems, automated programs designed to detect suspicious activity. Over the past few years, especially heading into 2026, these systems have become far more advanced, far more sensitive, and in many cases, far less forgiving. Banks in Canada are under increasing pressure to comply with strict anti-money laundering laws. That means they're constantly scanning accounts for patterns that don't look normal. Now here's the problem. What's considered normal isn't always clear, and it doesn't always match your reality. You might be someone who prefers keeping a large cash balance for security, emergencies, or personal peace of mind. But to an automated system, that same behavior could look like a potential risk. Let's say you deposit a large amount of cash. Maybe it's savings you've been holding on to. Maybe it's money from selling something, or even funds you've gradually accumulated. To you, it's completely legitimate. But to the bank's system, that sudden deposit might trigger a flag. And once that flag is raised, your account doesn't just get a gentle review, it can escalate quickly. This is where people start running into serious trouble. Because once your account is flagged, the bank may temporarily restrict access while they investigate. And here's the part that catches people off guard. You might not get immediate answers. You might not even get a clear explanation right away. All you'll notice is that something isn't working. Your card gets declined. Your transfer doesn't go through. Your access is suddenly limited. And in that moment, it feels like everything just stops. Now imagine this happening when you actually need your money. Bills are due. Groceries need to be bought. Maybe you have an emergency. And suddenly, the funds you thought were secure are completely out of reach. That's the reality some people are already experiencing, and it's expected to become more common as monitoring systems continue to evolve. But let's go deeper, because this isn't just about deposits. It's also about how your money sits in your account. Large inactive cash balances, like keeping $20,000 or more sitting without much movement, can also attract attention. Why? Because financial systems are designed to detect patterns, and inactivity combined with certain types of transactions can appear unusual. Again, this doesn't mean you've done anything wrong, but the system doesn't think like a human. It doesn't understand your personal habits, your reasons, or your intentions. It only sees data, and if that data doesn't match expected patterns, it reacts. And here's where things get even more frustrating. Once an account is flagged, the burden often shifts to you to prove that everything is legitimate. That can involve providing documentation, explaining transactions, and waiting for reviews to be completed. During that time, access to your money may remain limited. Now, to be clear, not every person with $20,000 in their account is going to have their account frozen. That's not how it works. The issue is about combinations of factors: how the money got there, how it's being used, and whether those patterns align with what the system expects. But the reason this topic is gaining attention is because more people are finding themselves caught off guard. They didn't expect their normal financial behavior to trigger anything. They assumed that as long as their money was legal and their intentions were honest, everything would be fine, and most of the time it is. But most of the time isn't the same as always. That's why awareness matters, because when you understand how these systems work, you can make smarter decisions about how you manage your money. For example, keeping clear records of where your money comes from can make a huge difference if questions ever arise. Being mindful of how you move large amounts of cash, rather than making sudden, unexplained transactions, can reduce the chances of triggering alerts. Even something as simple as maintaining consistent account activity can help your financial profile appear more predictable. And predictability is exactly what these systems are looking for. Now let's talk about another layer to this, the psychological side. Because for many people, the idea of their bank account being frozen feels almost impossible. Banks are supposed to be the safest place for your money, right? That's what we've been taught. But safety doesn't always mean accessibility. Banks operate within a framework of rules, regulations, and risk management policies, and when those systems detect something unusual, they're designed to act first and ask questions later. It's not personal, it's procedural. Still, that doesn't make it any less stressful when it happens to you, and this is why conversations like this are becoming more important, because the financial world is changing. What worked 10 years ago doesn't always work the same way today. And what feels like normal behavior to you might look very different through the lens of an automated system. So the goal here isn't to create fear, it's to create awareness. Because when you're aware, you're prepared. And when you're prepared, you're far less likely to be caught off guard. Now think about your own situation for a moment. How do you manage your money? Do you keep large amounts sitting in your account without much movement? Do you make occasional large deposits without thinking twice about how they might appear? Do you assume that as long as everything is legitimate, there's nothing to worry about? Those are the kinds of habits that are worth reevaluating, not because they're wrong, but because the system evaluating them doesn't always see the full picture. And that's really the key takeaway here. It's not about changing everything you do. It's about understanding how your financial behavior is being interpreted behind the scenes. Because in 2026, it's not just about having money. It's about how that money moves, how it's tracked, and how it fits into patterns that systems are constantly analyzing. And the more you understand that, the more control you have. So as we move forward, keep this in mind. Your financial security isn't just about how much you save. It's also about how you manage, document, and present your financial activity in a system that's always watching, always learning, and always adapting. Stay informed, stay aware, and most importantly, stay in control of your money.